Hi there, I'm Dean Heskin. Thank you for tuning into our podcast, The Secret War on Cash, where we actually are at war, unfortunately, right now with Iran, and it's creating quite a whipsaw, if you will, of activity in the financial markets. I have Chris Agelastos, my co-host, with me here today. Chris, hi there. How are you? I don't know why I'm
Uh,
speaking so elongated today, but
yeah,
maybe
we're
because
both
we're
a little
doing this
off.
little. Well, you're a little more off than me, and we don't need to get into that right now, but. Um, Yeah, I mean, a lot going on in the world right now.
Crazy.
Financial markets going crazy. The this war over in Iran. I mean,
Yep.
just kind of it's very interesting. In fact, too, all the back and forth on the political front and the financial news. Between governments, it's really just kind of speaks to the kind of the craziness of today's day and age that we're living in. There's just a constant back and forth and no agreement, no solidarity, other than other than maybe like our good old friends at BRICS. They seem to be getting on the same
Yep.
page with each other better than just about anybody right now. Well,
Yep.
let's look at our first article here. CC will put it up. The from Watcher.guru. Global demand set to hit a record 4,900 tons in 2026. Now, is not even really. I mean, it's a record, so that's a good thing. But
Yep.
the bottom line is, I mean, gold has been setting records, demand records, pretty consistently, seemingly year after year. I mean, central banks been buying it up by the wheelbarrow full, if you will. The banks are doing it, institutions are doing it. I mean, it's just become a very common thing. And so, as you read that, though, it's like I think what it really for me and hopefully to the average investor or person out there, that what this speaks to is the fact that the powers that be out there, they see trouble coming, and because of that,
Yeah.
what they're doing is they're positioning themselves into gold and silver right now, to try and give themselves a financial hedge, a safe haven to kind of protect them against what's coming.
Yeah. And that's I would tell people like we get people that ask us a lot, hey, is it still a good time to buy? Is gold too high right now or silver? Whatever they happen to be talking about. I would tell them to read this article because it lays out all the different demand points from everything as simple as jewelry demand, which is always, pretty consistent but growing, through the central banks, physical gold for, coins and bars, as well as ETFs, the central bank diversification. All of these reasons have the World Bank forecasting increasing prices for the next 2 years or more, with gold prices inching towards 7,000 to 8,000 per ounce on this current trend. So, sitting here in the low $5,000 range, depending on the day, I would tell people there is still plenty of room to go. And if you haven't gotten in yet and you're thinking about it, you need to move quickly.
Right. Well, and it's definitely something that there people do it. To this day still surprised me how many people are sitting on the sidelines wondering if, or if it's like you said, if it's already made its move and it's too late. It's
Yeah.
never too late to have an unencumbered asset into your portfolio, like a
Yeah.
unencumbered meaning gold. Unlike really most everything else out there, there's no debt tied to it. Its value is based on what it is, and that's why these banks, these institutions are buying it, is because at the end of the day, when we are living in this world, especially on the global front, where there seems to be more than a fair amount of distrust nation to nation. You don't have to worry about trust with gold, because gold has its value based on what it is, not on the promise or the assurance of another country or another government or something to that effect. Which
Yeah.
that is a perfect intro into our next article here out of the Daily Hodl. BRICS nations, Brazil, China, and India, dump 144 billion in US treasuries in 1 year.
Yeah.
144 billion.
Yep.
And so here's the thing, when you look at the demand factor of gold in terms of, like we just talked about in that previous article, with 4,900 tons
Hmm.
being purchased in 2026, you couple that with, and this is what's very problematic for the United States. These treasuries that are being dumped, first off, a portion of, I would imagine, fair portion of that money is probably going to make its way back into gold at some point. But on top of that, you have this BRICS alliance that whole initiative was centered around de-dollarization, and they've really stuck to their guns. We found ourselves in a tariff war in hopes of that being something that would kind of get them to stop in their tracks, if you will, but it certainly didn't. And again, they're unloading our treasuries like crazy, and I don't see any end of this anytime soon, Chris. I think it's only going to continue, and we're
Yeah,
talking big
and
amounts too. We're talking like, well, like here, Brazil, uh, they dumped what 32 billion, a reduction of roughly
yeah,
16%. And skipping ahead
yep,
of that, India got rid of 36 billion, which was 18% year over year decrease. So I mean,
yeah.
they're getting rid of a ton of this stuff.
And remember, India is who we were talking about. Gosh, just in recent weeks, maybe a month ago, they had publicly come out and say, "Hey, we're not dumping the dollar. They're working on some trade agreements with us." And all while doing that, dropped about 18% of their holdings. I mean, that's nearly a fifth of their dollar reserves they unloaded while saying, "Hey, we're not dumping the dollar." And that's why I
Right.
think it's important for people to pay attention, not so much to the headlines and the talking points that you see on the news, but actually look at the numbers and what are these countries doing. And they are very clearly moving away from the dollar and backing their own currencies with physical metal. And
Right.
they can't argue those numbers. When you look at the facts, and even I think it was in this article, yeah, that ING was came out and said, look, the U.S. dollar's safe haven status has weakened, and it's going to face further downward pressure. So de-dollarization and diversification strategies by these other economies are continuing to move forward. And you're right, it's not going to slow. If anything, I think it's going to speed up. But even at its current pace, it's going pretty fast.
Sure. And well, and listen, as this war, kicked in, we did see an increase in rates. We did see a strengthening of the dollar to some extent.
Mhm.
But see, it speaks to another part of the bigger problem, is that as rates go up, that means debt becomes more expensive. Well, we are a
Mhm.
country that we are dependent upon
On debt,
debt into
yeah,
perpetuity, and so as much as a person might think, okay, this is a positive thing that we're seeing rates go up, we're seeing strengthening of the dollar. No, it really is not, because when you are in a compromised position with debt, as we are in the United States, no different than any other household,
yeah,
you put yourself in harm's way. But where it really hasn't been as much of a problem over recent, because this has always been the case, Chris. We hear that
mhm,
from people all the time. Well, the U.S. has always been in debt, always will be in debt. We have shutdowns, they open back up, and it's very easy to kind of turn a blind eye and a deaf ear to it.
yeah,
But really, at the end of the day, the unique aspect over the last couple of years of what we see taking place is, again, this de-dollarization, where we see these nations not only unloading dollars, they're unloading treasuries, and they're also buying physical gold. So it's really setting up to be something that I think, unfortunately, could be quite a problem here for the United States.
yeah.
All right. Well, thank you, Chris. This has been a interesting last couple of weeks, and I think it's going to continue. For those of you tuning in, if you have not received a copy of our a free copy of our report, The Secret War in Cash, you can call or text us at 1-800-289-2646 and request that. You can actually visit us online and request it as well at www.swissamerica, all one word.com. And other than that, we'd love to talk to you, excuse me, more in the future. So if you're not subscribed, please do so. And have a great rest of your day. We'll talk to you soon.
Take care.